Hey, what's up, Ali? How you doing, man?
Hey Manny, what's up?
So, how you guys doing, man?
Doing well, doing well. How's your Sunday going so far? Your weekend's good?
It's going good, man. I'm chilling in literally outside, just you know.
Yeah, how's the weather? Is it cold by you or?
It is, it is. It's pretty cold actually. I'm not gonna lie, but you know,
Yeah,
kind of wearing a nice jacket. So,
yeah, for sure.
how you guys doing? You guys can see my screen, right?
Yeah, we can.
All right. I'm just waiting for everybody to come in here, so uh, so that we can kind of get started here. I mean, there's a couple of things kind of wanted to talk about. One of the things that might be happening, it's not really 100% sure. But the other thing is there's a one announcement, and then the other one is we'll be going over today. Basically, price action and kind of how to understand that you should be taking profit, right? Kind of sizing into trades and understanding, uh, you know, where you should take profit and how much profit you should take in, uh, how to leave a certain amount on so that you can kind of go from there to kind of make money simply, right? Because we want to keep some on uh, so that we can kind of make money from that little 30%. And we'll be going over all of that. So, but how was your guys' weekend in general right now?
It's been good.
I've been complaining about cold and I'm drinking literally iced coffee while I'm not like fully outside, but I'm kind of like outside, you can say. So I'm sitting in cold drinking iced coffee and that's
Why
about
don't
it.
you have a couple of pegs of hot drink? It would be good.
I have
Like
no clue, man. Bro, I have no clue. Look, I still have that little bit of a cough there, but I don't know, man. I'm just made like that. I'm built like that.
couple of shots of tequila should be good, I guess.
What was that?
Couple of shots of tequila should be good.
Yeah, but I don't drink, so
Maybe an Irish coffee.
there it goes. That too.
Yo, Wall Street question.
What's up, man?
You own real estate too, right?
Yeah.
It's fire.
So
You first started off with trading, right?
yeah, I was pretty young at that point. Yeah, I couldn't even kind of think about it, real estate. I mean, at that young age, but yeah,
That's fire.
I mean that's the thing too, right? Like having to be able to move guys, right? Like using this as a ship that kind of drives you to other things that you want to kind of get big in.
Yep. What? Just random question. What nationality are you? Because I know you have an accent. You're Hispanic, right?
No, I'm not Hispanic, bro. I'm Indian actually.
Oh, really?
Yeah.
That was a curveball. I did not expect that. I thought you were Hispanic.
I was like technically kind of like, very, very young when I came here. So it's like, I think you're, what area are you from? Like,
Me, I'm from Philly.
all right. Oh,
But
so
I'm
you got, okay. So then, I mean, I thought it was probably because like the New York accent because I kind of grew up.
Yeah, you do have like a kick of New York to you too.
Yeah. And now I gotta stop the annotations because somebody had to draw stuff.
I need to get more coon asses in this group.
What was that?
I need to get more coon asses in this group.
Yeah. All right. I mean, it's all good, man. We can get a lot of everything in here. It's good. All right, man. So let's get started, guys. One of the cool things. Can you see my screen now? You guys can, right? I mean, you guys can't. You guys can only see Thinkorswim, right?
That's correct.
You don't see my Chrome, right?
Yeah.
No, right? Okay. So, give me 1
I
second.
see your account balance.
Okay, good. All right. So stop share right there. Pull up Zoom again. Google Chrome. All right. So this is what a lot of people been kind of asking me about, right? Basically, how they can get hands on the same algo that I use every day, right? So this is going to be one of those things that now that I spent a couple of days learning PineScript, I can code on even TradingView and on Thinkorswim. But with TradingView, I'll be able to lock some of the scripts so that you guys, because we don't want this out there, but you'll be able to get your hands on this in the coming weeks. So just wanted to kind of share that with you, but this is the same thing that I use. And then of course, what this allows me to do now that, kind of like they're pretty similar, right? With ThinkScript and PineScript, they have pretty good similarities. One cool thing that I'll be able to do is, some of my higher end stuff that I don't actually put up on the screen and, share, I'll be able to do that as well. But it's going to take a little bit of time because, just like anything, you can't learn everything in one day. So there is a lot of stuff that to transfer over. There's, the differences between PineScript and ThinkScript. So working on that, right? But let me exit this. And just to show you guys that too. And then also, you got like longer term algos as well, right? And then of course we have scalping and stuff like that. So that's one thing that'll be.
So you're switching from
I'm not switching from
to...
no, I'll be on Thinkorswim,
Okay.
but charting wise, you guys can see some of the same things. Like even in pre-market, some of you guys don't have the option of kind of having the same exact chart as me, where now you'll be able to do that, which will kind of help you also kind of hopefully I would say, learn. Let me just see if share the right, where you'll be able to kind of see almost exact same thing that I do. So the learning curve hopefully will kind of go down from there. But that's that. And that's the only reason I did that was because last week we had a couple of people that kind of, were asking me about that. So, and that goes to show I do code my own things too, guys. So it's because some of you guys didn't believe me, but that's for that. But all right. So another thing is, guys, now we're going to be moving on into sizing and then taking profit. How many of you guys had trouble with that? Honestly speaking.
I have.
Yeah, I definitely have some trouble with that.
I had trouble, to be honest, but then I picked up on your methods, and since I picked up on your methods, I've been successful in almost every trade, to be honest with you.
Exactly.
So as in, you're just in and out, and like if you don't like, if the stock is not moving where you think it's supposed to go, you're out, regardless of what the time.
Even if the stock is a little bit slower, you want to be able to kind of get out.
Yeah, I think it happened to you on Tesla this Friday, right?
Yeah.
You just, all right, whatever. I don't care. I'm out. And then it literally moved toward your target after you left.
So that's one of the big things, right, guys? Is because I've been doing this for a little while. The only thing is, if I stay in trades for too long, what happens is I get that little bit of anxiety because I've been trading the same way for so long now that usually you want to keep that confidence up where you take the long trade or you take the short trade and you want that to work out, right? So one of those things is if it doesn't go your direction, let's say for half an hour, what happens with options is, as you guys know, they get depleted, right? As we go along, the time. So to kind of keep that, in the right mindset and being in that same mindset of, right, like only like telling my conscious to take the only trades that are going to work out in the next 5 to 10 minutes is also a big thing, right? Because that's literally what trading is about too, like psychology and consciousness as well, right? If you keep on doing some of the same things in the background, or you just, keep on doing the same thing again and again, your conscious will kind of catch that thing, right? It'll kind of keep it where you won't make some of the same mistakes, right? Like if you keep on making the same mistake again and again, it'll work against you too, where you'll keep on making that mistake, even though you don't want to, even though you know you shouldn't be making that mistake. But somehow, some way, you'll kind of tell yourself that it's okay this time, and it's okay that time. So, so doing some of the right things, right, over and over again will help your conscious, right? So that's the way we want to go, instead of making the same mistakes again and again. Yeah, you can make the same mistake maybe 1 time, 2 times, 3 times, but after that, if you keep on making the same mistakes, it'll actually work against you. So one of those things to kind of fight against that is I don't hold for more than maybe 10 minutes. If the stock just keeps on going sideways, I just cut my losses and move on, because I know the next day we're going to have better opportunities. And then also the other thing is where I'm not really kind of long on Zoom. Let's say if I was long on Zoom at 410, right? And I didn't take profit as Zoom is coming down, it really doesn't matter to me, even if Zoom kind of ended up going the right direction, or, let's say it wanted to go the right direction, I will still cut my losses down here, just because it's right next to the lows. If it would have actually just held this level right here, the 409, 410 level to the downside, we could have very easily seen like 405s, right? So instead of taking that big loss, I would rather cut my losses quickly and, take that maybe 5-10 grand of a loss, rather than to kind of take that 20-30 grand of a loss that I would need a very, very good trade, right, the next day to kind of make that back. And then also, honestly saying, let's say if I go long here and I don't cut my losses here, then technically you're just hoping. And that's one of the big mentalities also that you want to kind of, keep out of your head, is that hoping mentality, right? Hoping that the stock will go up. Yes. If you would have held, would the stock would have gone up? Yes. Well, but how do you know it's going to happen again and again though, right? That's one of those big things. So that's why you want to, actually, let me just do it from here. So it's right. How do you know that it's going to keep on doing the same thing again and again, where it's going to go up? Because you can have something like, or let's just go back here. Actually, let's find an example of where if you do not cut your losses, something like this, right? Let's say this is a sideways action, right? But look, this time the stock kept going down. So it really depends on you to kind of, understand the mentality of when they're trying to trap you, and, when they're not trying to do this or not trying to do that. So honestly saying, like, it's always a good idea to kind of take really quick scalps and take these, 5 to 10 minute trades. That's it. And anything after that usually means that you're hoping. Because, on 1 minute, some people have strategies like that where they hold for like the whole day. If I want to hold, I'd either be playing the daily chart or I'd be playing the weekly chart, because look how much cleaner these charts are versus, for the long term versus for the short term. So even like 4 hour, look how ugly the 4 hour chart is. Right? Look at these wicks, right? Some of them are literally, look, 10 points. Some of them are 40 points, 50 points, right? So you can't really differ between that. So that's why on swing trading, I always trade on the weekly chart, right? So even though I have to hold for longer, but look how much better of a return you can get versus like trading the 4 hour chart. So there's different strategies. So like for long-term swing trading, you want to hold for longer, but for day trading and scalping, you want to take these quick little scalps to the upside or to the downside or to your target and just walk away. Just like how this Zoom trade happened, right? This Zoom trade was a long, literally when we talked about it, came back down here, alerted in the chat room. You guys can go check out and confirm if, we alerted this or not. See, Rada, yeah, bro, it is. But what are we going to do, right? It just went sideways. But it did go up. It did come back down, and we alerted it. I think it was like either in one of these candles, we alerted it, where we were like, just watch the dips on Zoom, and we're gonna have a nice little move. So guess what? the dip buys on Zoom was right here above the 410s. And you know, one of the big mistakes that I did is I deleted all of my lines that we had, but we had lines literally up to 413s, right? Which was resistance from the past, as you can see right here, body of literally the previous day. So that'd be basically, I think maybe the open and the close of yesterday, and then also the high and the low of yesterday. So I had a lot of lines drawn, which I'm not going to go ahead and do again, but we had a couple of lines. But usually what do we always talk about, right? The whole number. We talk about how, you know, the whole numbers like 5, 10, 0, right? So stuff like that, we want to kind of work with that. So like if the stock is at 100, right, we want to kind of target the 105, because usually that's where a lot of sellers are sitting. A lot of sellers are, you know, waiting to kind of reverse the trade. But technically my long from here on Zoom literally was up to 415, but I ended up taking profit literally as it crossed the 414 level. So once it crossed the 414 levels, I ended up taking about 70% off. But then you get this crazy little wick where it touches the 415, comes back down, starts, you know, going sideways. That's where I took the 30% off. So why did I only take 70%? Well, because if I would have kept that 30%, honestly, literally for, you know, this period of time, let's say, you know, this hour or so, right? Even though it was going sideways, that options would have probably gotten, you know, kind of messed up by, you know, this time because it was Friday. But still, even if I would have just held that same option, I don't know if somebody has the 410 calls for Zoom. If somebody has them, can you please put them up in the chat so we can look at them? Let's see if I have them. The Amazon. Yeah, no. I was doing a little bit of research. So I kind of don't have those. Should have just kept them on, but the 410 calls were the ones that we, you know, kind of looked at. But if you really look at the 410 calls, even if you would have just held 30% of them, you would have gotten maybe like 50% of what you would have made on this little run. So that's why you want to keep maybe 20 to 30% on, just so that if the stock ends up breaking your level and continuing, that you still get paid on that 30%. And because they're options, right, you get that exponential growth rather than you get that, you know, slow and steady returns in a stock. Because technically on a $5 option contract, that option contract has to move $1 in order for you to get a 20% return, where on this Zoom stock, the stock would need to literally move up 80 points, right, to get a 20% return.
So you're saying the first 30 minutes, because of the IV, you're more likely to make a higher profit compared to the.
That too, yeah.
Okay.
Yeah.
Okay. I see.
Because I mean, you know, that's one of those things, man. That's like, I've met so many option scalpers, and honestly saying anybody that trades options, usually you want to, you know, keep an eye on the bid and the ask. And, you know, once you get into options in the first 30 minutes, you want to be able to kind of understand where the resistance for the stock is, and then compare it to the option chart as well, right? So let's say if the option chart is at $5 and the Zoom stock is at 410, right? And it goes up toward the 415s. Now, if the stock goes up toward the 415s and the option contract goes up toward the $6 mark, you have to be very quick and very good in the fact where you want to start putting your orders out already on the ask, right? So that you have a better chance of getting filled. And then, of course, if it doesn't get filled, you want to be able to cancel that order and just put it out on the market, because you want that momentum and you want that liquidity that you're getting on this little crazy wick up, right? Because on that crazy wick to the upside, you're going to get influxes, like you'll get a lot of volume and very like quickly, right? So once you get that volume, like what I basically mean is that, you know, once everybody starts going in, you want to be able to sell to those people. Well, why? Well, because you've heard it right? Like a lot of traders fail, right? So those 70% beginners that are buying these options on Robinhood, right, that don't know how to look at charts and how to look at, you know, some other stuff, right, to kind of analyze these options or even charts or to understand which way the stock is moving. You want to be able to sell to those people, because as they're buying up these option contracts, as they're moving up on bid, you want to be able to have your options out there on the ask, right? So you get the best fills versus, right, being able to put it out. So because think about it this way, right? Like if you were waiting for it to kind of go up to 415 and you don't put your stuff out on the bid or the ask, right? Guess what happens then, right? You get a wick like this. Guess what? Those options go and touch maybe $6 and drop right back down to $4. Now you just lost $2, right? On literally one crazy candle like this. So why not have your option contracts already out there at $6 that you have a better chance of getting filled? You know, a lot of times, I mean, not a lot of times, but sometimes, right, you don't get filled, even if, right, the active trader shows that there were contracts all the way up at $6 and you had your option contracts basically on the ask at $6, even though these option contracts might go through $6 and, you know, sometimes you still don't get filled. That's why you want to put your option contracts out there, right? Like basically right before, I don't know, let me explain it a little bit better here, pulling up option contract right here. There we go. Okay, let's look at these Amazon 3170 calls actually. Okay, there we go. All right, so I don't know why I just opened up calendar, but look what the option contracts did right here. So now let's compare the chart to the Amazon chart. Right here. Guys, I'm sorry about that. I'm working with limited space today. Because I wanted to do this webinar in like a nicer place where, you know, where I just feel good and, you know, so that's that.
You're sitting at a beach.
I'm not sitting at a beach, man. If I was, bro, but look, let's look at these basically puts, right? 1030. Look at this little crazy wick right here. And you know why that happened? Look, just because we broke the lows right here, right? So now let's say you go long Amazon calls, right? At $8.50 because you see this little break of this trend line, right? That you have drawn beforehand, right? You've drawn in pre-market. So anything under that, you would look for your next target, which would be, right, the next whole number, which would be 3175. And then of course, as you see, 3175 is the lows right here. So then you would go to the next whole number, which will be 3170s, right? So technically anything under here, your target will be 3170s. Everybody got that? Why it would be 3170s? Right? Because what do we go for? Like the whole numbers, right? Rather than even like support and resistance. Honestly saying whole number is more important because it just is, if I promise you, right? Support and resistance work, but they only, you know, work at a certain level. From what I've seen is, right, if you target these whole numbers, you'll see a crazy improvement in your trading right out the bat. But just to show you, look at these options. These options went from $5.50 on literally this drop from 3200s all the way down to 3180s. And look, they made a high of 1350s, right? Where here it broke the low and it went down literally 4 or 5 more points, right, on the stock. But look at these options. These options capped out at $13, basically the highs of these options. So that's why you don't want to hold these option contracts for, you know, literally an hour, just like we talked about. But the main thing is right here. Let's say you're long in the 850s, right? You're long in the 850s. Now, when this stock is literally selling down, right below or right around, basically is right around the lows of, you know, this the day, right? Right here. Let me just draw a line right here. Let's say these are the lows and the stock is going toward the lows. So what you want to be able to do is literally start putting your contracts out on the ask. And how do you do that? Well, you would look at the previous history of the options, right? Hopefully this is not too much for, everybody, but it really is like that. You have to look at so many things, guys. And trading isn't just like one thing that you just focus on, right? There's literally so many things that you have to look at. And then, of course, I'm not going to lie to you, as the time goes on, 6 months later, a year, I promise you, this is just going to become like something that you're going to be able to do with blindfolded on, right? You'll be able to look at the option chart, right? And one glance and you'll be able to see, right, where you should put your contracts out on the ask, right? So basically the highs, this is where you should be putting your contracts out. Why? Well, because look, this time around, these options, even though the stock was at the low at 1029, look where it was at 1029 here, right? So it was at the lows, but look, these options haven't even made it up above basically the previous high. So what you want to do is you want to choose where you want to put your contracts out at, which would be basically the highs. So you want to start putting your contracts out on the bid or the ask, so that as this price goes down and breaks the lows on the chart of the stock, right, that these options drive through your price. So technically, being honest, I would have put my option contracts out at about 1274, 1270s, 1280s, 1290s. So I'd start putting these contracts lots out on those levels. So whereas these option prices drive right through it, you have a chance of either getting filled on the ask, or you can get filled a little bit better of a price. But what that does is that assures the fact that you will get paid. Because look, before this 1 minute candle happened, look at where the price was, 1028, right? And look right here, as you can see, the stock price at 1028 was at 3175, and look, 3175, right? But look, these options, when the stock was hitting the lows here at 941, look at where the options were at 13 bucks. But look, this time those options, the same options at the same stock price, were at about 10 bucks, right? So you have to understand the basically, IV and all of that stuff of, premium kind of going into options and, making them basically weaker and weaker as time goes on. But this is one of those things, that's the big reason you start putting your contracts out already on the ask, and the, kind of having these targets already set out before you even get into the trade, rather than you want to, because if you would have waited even just a minute, look, you wouldn't have gotten filled at the top here, because guess what? You would have gotten filled right at 10 bucks. So all of this past about 15, 20 minutes of a conversation goes back to this. If you do not take profit, or if you don't put your options out there, right? If you don't put your options out on your target, what happens is you can end up losing 10 to 20% of your option contract. So you have to be vigilant in that fact too, where if you go into a trade, you want to be able to kind of exit properly as well. That just plays just as much of a role as going into a trade and having it work out with options.
So just to confirm, you're watching the option price chart as well as other charts?
Honestly, I don't watch the option chart price. I watch this. That's it. This tells me everything.
Oh, and you'll scroll up and click your ask size somewhere up the ladder.
Yeah, because the ladder will tell you almost everything that you need to know. You don't need to.
How did you know? Sorry, how did you know the previous high if you don't have the option chart up?
Being honest, all it is I wouldn't even look at the previous high. Honestly saying, like, for beginners, you want to look at the previous high just so that you get a better idea. Where somebody like me, I'd be looking at, honestly, like if these option contracts are going up, right? Like right up above like $10, I'd start basically putting my contracts out there at 11, right? A little bit higher. And you have to understand how options work on some of these bigger trades as well, right? Like Amazon, option contracts are going to move maybe $1, $2, $3, right? Where on a Zoom options, $5 option contracts, they're going to move maybe $1.50.
Okay, so that's just from experience that you
That's
know,
just-
like, oh,
yeah.
I'm gonna click $1 up because it's
Yeah.
Amazon.
Yeah.
Okay.
Yeah.
Thank you.
I have a quick question. And
That's why
like,
you never get the best fills ever, right? Like I never get the best fills. I never get the worst fills, but it's just, it's just a medium, right? As long
But-
as you can keep those medium, it's always good because you're not targeting, because look, right? Like this would have been a very easy trade in general. Like let's say if we even would have shorted it right under 3180s, as you can see, look, right? This candle breaks down right below the 3180s, right? Comes back up to kind of resist the line and see if it wants to support above it, but it's not able to support above it. So it comes back down. So let's say even if we take the short at 1022 for that, now we're going to have to look at the option chart, right? But on regular time, we wouldn't be doing that. We'd just be going long on these calls, right? We'd be buying these calls at, what time is this? 1022, right? So let's see. Look, so you would be actually going in long here, right? 1022. So at about 910, 950, right? So you'd be actually long on these options right here, right?
What price do you put there? Like somewhere in the middle?
You would just either, I mean, honestly, you can honestly market buy it. You can kind of start putting stuff out on the bid and see if you want to get filled like that. On a pullback like this, honestly, you can literally kind of go into the bid and you can get filled with a nice price, right? So all of that stuff kind of, of course, it does come with experience too, where
Yeah.
you're able to kind of go in quickly and go out quickly. That's why I say, right, don't even trade options in the beginning, because look how much of a, like, easier it is to trade a stock where if you short at the, 3180s, you'll still make $10 to the downside, right?
Mhm.
If it goes where with options, look, if you were long options here, in the 3180s, you'd be long up here at $11. And now you're going to have these options. Wait a second. Where is it? $13. Yeah, right here. So you'd be actually long options right here, right? So you'd be up here long at $11, and look how much harder these options have to work to get up to basically a profit, right? Even though, look, the stock actually broke the lows and went down even like 4 or 5 points, where these options literally had a hard time breaking these highs, right? So honestly saying, it really, a lot of it, not a lot of it, I would say, half of it does come with experience too, of doing it over and over and over again, that you're able to kind of, right?
So just to
Yeah.
confirm, it's buy, bid, and sell, ask would give us, like, if it gets filled, would give us the best price.
What was that? I'm sorry. Go ahead. Just reading
If
your
we
chat.
do buy, bid, and sell, ask,
Mhm.
it would give the best price if they
It
get
would.
filled.
It would, but then of course, right? Just like we said, right? Like you can't focus on one thing. So let's say you focus completely on that, try to get the best price and best everything, right? Then look what you just missed out on. You missed out on almost of a, look, let's say you wanted to go long, right here at $9, but you try to get the best fill of, maybe try to get, a discount of 50 cents or so on these option contracts. So now you keep on putting it on the bid, you keep on putting it on the bid, and you never get filled. And look, you just missed a 3-4 point move just because of that 50 cents. Is that worth it?
You're talking about me.
Like, that's what I'm saying, right? Like it, so it really, honestly saying, that's why I always say, guys, right? I was talking to KK, ask him how many times I kept on being like, bro, go back on demand. Honestly, guys, keep on trading, right? Practice trading, and then also keep on going back and, reviewing these charts, right? And just keep on doing. James T.
so my question
I
is
was
like,
gonna no, I'm not, dude. I'm sorry, man. I was answering somebody in the chat. This guy said he's shutting down the Discord and moving to Bali next week.
that's funny. So I have a question. When you have to be fast in these, these options trading.
Yeah.
And like, I feel like I sometimes, pay the premium by giving the ask price.
Uh-huh.
Is there a way to set it on Thinkorswim to do the mid price, or not really?
That's
Or you have to
That's
pay?
the worst thing, right? Because it
Yeah.
doesn't have that. I tried having that. I tried to do the same thing where, just put it out on the middle, right?
Yeah,
But there's literally no hotkeys that does that. Believe me, I've been there too, man. I try to do the same exact thing as you're saying, right? Just having it where instead of trying to put it on the ask or the bid, you just put it out in the middle, right?
Yeah.
Because you have a better chance of getting filled, right?
Exactly. Yeah.
But technically, if you really think about it, that's market price, right? Because market price has a chance of 50-50 of giving you either the middle fill, either the ask fill, or the bid fill, because you have no clue what's going to give you, right? So that's why, they don't have that option. But what you can do is, that's why you want to have this active trader open, and you want to be able to click these buttons quick, right? Where that's why you want to have these things right there as well, right? Being able to kind of click on these 20 contracts and just be able to just click on the bid or the ask a couple of times and just have that order out there, right? And if it doesn't get filled, what you want to do is you want to have those options ready of, Control C, cancel everything, right? And then just market everything, right? So the same thing, we didn't do the live trading last week simply because on demand you can't use hotkeys, and same thing as you can use hotkeys on paper trading. But the issue with paper trading is I would honestly have to go into paper trading and trade as the market's going, which is there's literally no point. Might as well just.
Hey, Wall Street, when you're selling and you're talking about clicking $1 up, that means you're selling only on.
That's just a
up, not
theoretical number, though.
No, I know that, but you're not selling. You're not you're catching it on the way up versus seeing it coming down and then trying to catch, because it drops so quickly, it's almost impossible.
That's the thing. Yes. Because if you actually, honestly, if you try to catch it while it's coming back down, dude, you have zero chance of getting a good fill. You're going to get filled all the way at the bottom.
Yeah.
Right?
And you'll lose for sure.
Exactly, because we don't have the best internet. We don't have, we're not closest to the firm, right? The routing firm, that is what we're talking about. We're not in Chicago, because a lot of these algorithms that run on options are literally right next to the firm, right? Like the routing firm. And they have the best internet. They have the best computers that literally see moves 2 times faster than we do. And they are literally probably 5-10 times faster at executing trades than us. So like, there's no chance of you winning unless you know what you're doing. And how do you know what you're doing? By practicing, guys. Right?
Cool. Thank you.
So I have a quick question. So those orders will be a market order or will be a limit orders?
So the thing is, right? First thing, if you click on the bid or the ask, those are always going to be a limit order, right? But if they don't get filled, what you want to do is, that's why you want to have those hotkeys set up. If you're trying to trade fast, like I do, right? Because there's a difference between, right, buying 20 contracts on the market and then waiting for your price target to hit and then selling. That's a different way of trading. Where how I trade for as you guys know, I'm in a trade for sometimes I'm even in a trade for only 3 minutes to make 30-40K, right? So if you want to make it like that, then you would have to use hotkeys, right? So let's say you put your orders out there on the bid or the ask, whatever, right? And they don't get filled. You have to make that split second decision of, right, using your hotkeys to cancel all of those orders. And guess what? Put that stuff out on the market. And how do you do that? You use hotkeys.
Oh, so if it's reversing on you, you're not clicking your mouse at all. You're just exiting at market.
Yeah. If
it's like a panic button almost.
Let's, that's why sometimes, losses are pretty big on options, simply because even if you're long here, right, and the stock starts selling off here a little bit, you just have to mark it out, honestly, because then there's the point of, right, if you wait, then you can have that crazy big move work against you too, right? Just to show you an example, let's say, just to show you guys what I mean is this right here. Let's say you're short on these options, right? Do you just mark it out with a 1 point loss, or do you just keep on waiting and wait for it to literally rip up to $14? Because look how easily just this one candle can literally produce about a 4 point move on options. So honestly, if you're down money, you just want to mark it out. Doesn't matter. Because at the end of the day, then it doesn't matter to you. Then you're worried more about cutting a loss rather than trying to make money or trying to save money. Because believe me, been there, done that. Try to save money or make, like, you know, sometimes I used to have a target where I was like, okay, I'm, you know, $50 away from $1,000. Dude, I've given away that $1,000 plus twice that. So then I'd be down like $2,000. I'd lose that $1,000, like, you know, $950 that I would be up, right? For that $50. So think of how stupid that is. I've made all of those mistakes, right?
Yeah.
That's me being honest with you guys. I've been through that. I've done that. Do not have those targets. Focus on charts, right? If the chart tells you to buy here, then buy there, but then also exit when the chart tells you to exit. Not that, guess what, I'm $50 away. I just wanted to move a little bit higher, because now you're hoping, right? And hoping, it's you know, hoping is, you know, it's not good in trading.
Bro, my 2 cents, you know, when I trade, like I learned from you, I always just wait, you know, go for 1 or 2 points and get out, you know, even if it's going for 4 or 5 points. I don't take a chance because I buy market and I'm already down $1 or so because of bad fill.
Because of the spread.
And then, so I, you know, you see me, I'm just getting $2,000, $3,000 because I just want to get in, get out, done.
Raja, do you have your order already in when you're selling? Like you're like,
No,
oh,
so
I want
I
to.
basically, you know, I haven't, you know, learned how to place the orders on market. And, you know, I just want to be able to get in and out. You know, sometimes you see me, I trade for a minute. So I just buy market, sell market.
Oh, okay. So you're not even using the ladder, the active trader.
No, I just get in and out. You know, I mean, it guarantees me getting out.
Yeah.
Because sometimes with limits, you know, if you're selecting, you know, 1250 or 1255, and if the thing bypasses you, you got to cancel that, go and place it again.
Yep.
And, you know, with Amazon and some of these, you know, stocks, they move so fast that if you're not quick enough, you know, you can lose that money and more quickly.
But then also,
Yeah.
really think about it, just to head up on James's thing. I'm sorry about interrupting you, bro, there. But very quickly, like, that comes with confidence as well, right? Him being able to put his orders out on the active trader, he has to kind of already know that the stock is going to move, right? Because the options, right, will move if the stock moves, right? If the stock moves down and you're in puts, then these puts are going to go up. Am I right? So you have to kind of be confident in the stock as well, because Raja, you know, as you know, like right now, he has been trading for, you know, years and years. As he gets better, he's going to be able to hold for longer, and he's going to be able to put stuff out on the ask, right? Because he's going to get more and more confident in his trades, because he's already going to know that, okay, this is not the best point to just like, because like at one point you might just be like, okay, I'm just going to mark it in here and catch this really quick candle to the upside, right? You can do that. Or what you can do is you can go in on the market, and then what you can do is you already know where your target is, and then you're waiting for that target to hit. Once that target, you know, once the price of the stock comes near that target, what then you do is then you look at the active trader for the option, right? Then you see that these options that went from $6 to $8 or $10, right? So let's say they're at $10 now. Now what you do is you start putting your orders out basically above maybe 50 cents of those options, right? So maybe you start putting it at $10.45, because you know that the stock itself has, you know, 2 or 3 point room down to 31.70s. So you already know that the options are going to move up because the stock is going to sell off. Hopefully, does that make sense? What I'm saying? It's about confidence too, right? Being able to put stuff out on the ask. You already have to know your target, right? And you already have to kind of be really confident in the stock, where if you just take quick scalps, sometimes that's just because you're not 100% confident in your trading.
Hey, Wall Street.
Yeah.
Hey, man. It's LB Oki.
What's up, bro?
So the screen. Hey, man. How are you? So the screen you have up right now, when you're in a trade, is that the screen you have up that you're looking at, the actual option?
No, not really. I usually have those options open separately than these. This is where I usually have the two main stocks that I have. So you would have, I would have the 4-hour chart here for this stock. I would have the 2-hour, the 1 minute chart here, 5-minute chart up here, and then I would have two main stocks that I'd be watching like this. So have two main stocks that I'd be watching these 3 time frames for, and then I'd have other 5 or 6 stocks that I'd be watching just the 5-minute for.
Why do you need 4 hours if you're trading in like 4 minutes?
Because 4-hour tells you certain things that 1 minute doesn't. Because let's say if there's a 200 EMA resistance of 4 hours coming up, then you want to be able to take that profit out, right? The same thing as kind of being all knowing versus right. Like everything can help, right? Like
watching 4 hour before till Wall Street started looking at it, and it's pretty helpful. Like the way he has it set up, where on the left side it's 5-minute chart. Right upper left right corner is the 1 year 1 day or 1 year chart, and then the bottom is 4 hours. It basically gives you the trend. So if you see that if it closed up higher and it's going to push up higher, that there is a lot of buying volume that's going to come in. So it gives you an idea saying, okay, if I'm going to be, bull biased or bearish biased, because based on the chart.
And then also just to answer one of that questions in the chat, I think his name is Pranav. Yeah. The reason we don't trade, this is a very, very bad example on Zoom, but the reason we don't trade, the whole day is simply because look what stocks tend to do after the first 30 minutes to an hour, right? So these moves that you get in the first 30 minutes, right? Like these big moves usually end up going sideways, even though, I'm not going to lie, I'm just showing you guys really bad examples, but usually, right? Like, look, right? You would get this crazy big move on a stock, and then you would have these sideways actions, and that's what we're trying to trade. Rather than we're not trying to trade, these little chop fest right here. So we're trying to
if you look at Amazon, that does that all the time.
Yeah,
Amazon would go like up or down, really quickly on the first hour and a half, and then it just low volume sideways.
Yeah, and literally, this is one of the main things, right? Just going sideways. That's it. And Jay, we'll definitely, we're probably going to be doing like audio trades, honestly. Probably, I don't know. I'm still thinking about it. I don't know if I want to kind of put myself in that situation of, just cause like, being honest, right? Like, it's like at the end of the day, once you give somebody a certain amount, then it just keeps on going more and more and more and more and more. And I'm not trying to be at a point where I'm just, these trading gurus, right, on YouTube and shit like that. So
you give them the finger, they'll ask for your hand.
Exactly. Because it just keeps on going, right? Like, so that's why we're just gonna, I feel like right now we have that crazy medium of, right, you guys get to learn, and then you also get to kind of see me trade on the chat, right? Because we look at some of the same stocks that we trade every day, and we look at, basically in pre-market, we already know, which way these stocks are going to move. And yeah, I know a lot of people have a little bit of trouble of choosing which stocks to go for. And maybe the audio will help with that. And maybe I'll do like, once or twice a week audio. I already talked to Raj about it. But we'll probably be having, a couple of people on there.
How would you get on there?
Premium membership.
I'm practicing saying go.
Manny, I think you're on mute in case you're chatting.
There you go. My bad, guys. I was talking to somebody. But that'd be like a pre-market thing, man. Because I want too much noise on there. But technically, I think it'd be good. I mean, we'll see how it works, right? Like, because having maybe a couple of you guys, right, that are going to be able to kind of that are in pre-market, that know kind of the stocks that we go over, being able to alert that to the chat room and be like, right, okay, man, Zoom is moving, right? The way that we basically kind of were looking at it, it just broke the sport or resistance that we were looking at. It'd be a lot easier to kind of have where, a couple of people are kind of, putting in the effort of kind of, basically alerting stuff. I think it'd be helpful, but at the same time, we'll see if we're going to do that or no. But definitely looking into that.
Did you ever consider like live trading? Like
the thing with live trading is the same thing, man. Right? Like it just is too stressful, honestly. Right? Like
even like once a week.
But that's the thing, though, right? Having people watch you, like it's a different feeling, man. Right? Having to have people see everything that you do. Like I can stream my literally charts if you want. I have no problem because I know a couple of people that do that. But there's literally no point of doing that. The simple answer is that you want to follow me because I make money. But then the issue happens is if you follow the same trades that I take, what happens is there's two things, right? Some people aren't going to get in at the right price, right? How do I know that if I'm looking at a certain chart and I'm about to go in with 100 contracts, you guys front run me? Guess what? I get messed up there. And then, of course, right? How do I know that people aren't going to be selling against me or selling with me? Or, honestly, I don't even think the selling against parts like anything bad, but I know for a fact that a lot of people are going to get hurt because they're going to try to follow me. And guess what? Because everybody's going to front run everybody, right? As soon as I get in, you're going to get in. Or as soon as I pull up the chart for the options, you're going to get in, right? Everybody's going to start getting in. I'm going to get a bad fill. You're going to get a bad fill. Everybody's going to get a bad fill. And then once the stock ends up dropping, right, 30, 40%, guess what happens? Then I get blamed for it, right? Why do I want that on my head?
Yes.
Tell me.
I see what you're saying, but yeah, everybody's basically getting in at the same time anyway. Like the volume indicator, that's basically like when people get in on volume indicators, it's basically the same thing. Everybody's like, oh, get in at the same time. So, but I see what you're saying.
But it's with options though, right? Because the thing is, if it was stocks, it'd be different, right?
Okay.
The issue becomes with the liquidity of options. Look at this thing, bro. Like, just look at this crazy freaking thing. Think about it. If our whole chat room, even if all of us, literally, there's 5,000 people. I'm not saying 5,000 people will be trading it like that, but I'm just saying in general, let's say if 5,000 people all got in here, right? Where do you think we're going to get filled? Having 80 contracts. Where do you think I'm going to get filled?
Yeah.
Do you know what I mean?
Yeah, I see what you're saying.
And look, on this one drop, that's 20, 30% of what I invested gone. So people that live trade, you know why they're doing it, right? Like you understand, right? Like I'm not going to call anybody out. I'm not going to say this or that, but a lot of those people don't really make money off of trading too much. They make more money off of live streaming. I can do that too. I'll put up $1,000 price tag. And if you want to watch me live trade, go ahead, man. And, have maybe a couple of hundred people watching me do that, but there's no point, man. It really isn't. Honestly, at the end of the day, it's better for you not to follow me, because if you honestly do follow me, it's going to end up hurting you more than me. Because let's say even somehow I'm able to get in right first and then tell you guys, right? Of course, man. Yeah. See you later, Ryan. But right, let's say even if I get in first and then I alert it to you guys, right? Let's say I'm like, all right, guys, get into long into. That's why we don't do right exact call outs. We don't do guys, look at the 30, 70 contracts for Amazon, right? The reason we don't do that is simply because of this. Because it's the mentality of that, farm mentality where everybody's going to follow me 100%. Will you not? Tell me if I'm wrong. Will you not follow me? Right? Everybody will follow me. What's going to happen is that option contract is going to get shot up, right? If the option contract has 1,000 contracts volume and literally our whole chat room buys even 5 contracts at a time, right? Just because I did it, dude, we're going to do maybe 30, 40% of that whole day volume for that contract in literally span of a minute. So what do you think that's going to do to that option contract? Some of you guys are going to get filled all the way at the top. You're going to get filled at $14, and the next second it's going to be at $10. dude, I do not care. I'll get in first and alert it to you guys. And then as you guys buy this thing up to $14, I'll sell my contracts to you guys and I can make money like that. But do you really want me to do that to you?
Yeah, that's another thing. Yeah.
Do you want me to do that to you?
But
Nah,
man,
hell no. What
Exactly.
Hey,
So
It's very honest of you now.
but Manny, what
Hey,
about
man-
like these are blue chip companies? Like, wouldn't there be way more people, or is the
but,
volume?
but options, brother.
No, that's what I
options-
mean. Like options. Like, wouldn't there be more?
There would be, there's some hidden volume, but look, the thing is with options, it's not even 1 week contracts. You have weeklies, monthlies, yearlies. You have, all of these contracts. And look, each one of these days, 1 second, guys.
Wall Street, I think there's two things here, right?
Okay, all right,
First is
I'm back, guys. Sorry about that. My bad. I had a phone call.
Good.
Yeah, Wall Street. I was going to say there's two things here, right? If we live stream, people tend to follow more, right? And I think if your goal is for people to learn, live streaming and getting into a trade right away promotes a lot more following. But maybe
So Wall Street.
Bro, I think I accidentally muted James. I was gonna mute somebody else who was having the background noise. My bad, bro. Go ahead. Let me just James T. Bro, mute yourself. My bad. No. Can you hear me? You guys can hear me, right?
Yeah, I can
hear you. But
All right,
Yeah,
I was
we
trying
can hear you.
to mute somebody
can you
that
hear me?
had background noise, and I accidentally
can you
muted.
hear me now?
Go ahead. Yes.
Am I clear?
Yes.
I was like,
Yes. You're good. You're good, bro.
I was like, he doesn't like what I'm saying. What's going on?
No.
Um,
I was trying to mute somebody in the back here.
Because I'm trying to think through like there's two ideas, right? One is people want to learn from
Mhm.
watching you trade,
Mhm.
and the second is people want live stream, right?
Mhm.
So I think the live stream will promote more people to just blindly follow what you're doing, and it comes with all the consequences you've been talking about. Maybe another idea would be to it depends on your comfort level, obviously, right? But you record your screens as you make a couple trades, and then you decide, like, you take a 5-minute clipping of what you did, and that's what you could share with the group, so they can watch you live trade without it being live. So there's no fail issue, but they should technically learn from the steps that you took and the timing that you got in, and then the fill that you took, and then how you put it on the bid and ask. And there's benefit in that for the people who want to learn. But if it's like if it has to be live, chances are they're going to follow what you're trying to do, and it comes with all those.
I agree. There definitely is benefit in that because it just helps us understand how you think in live moments, like
100% fine. But the only issue then it becomes is, right, how much of it do I want it to be out there? How much of it do I want it to be where everybody gets to see where do I actually enter and where do I actually exit? Right? And then also the fact of, right, being able to render those videos, right? Because technically I would have to have Zoom running, right? Technically record that and then put that up on YouTube or wherever, right?
Yeah.
The same thing goes back to, I'm not trying to be a YouTuber.
True.
Yeah. So Wall Street, raw dog speaking. So the way I learned, like where I got today is since COVID started, bro, I literally sat down from 9:30 to 4 watching one guy trade. Like literally, bro, from like every freaking day, I would just watch this kid trade. And I mean, look at me, bro. I'm pretty on point with my call outs. I think I'm probably like 8 out of 10, 9 out of 10 with my call outs. And that was just from me sitting, watching someone else, knowing what they're doing, trade. And then when I had questions, I just YouTubed or I Google searched what like the person was saying. And that's how I learned. And I mean, me personally, I learned through like being babied and walked through. So me watching someone trade was me being babied and like walk through. And that's where it got to me today. So I think it'll be beneficial for people to like be able to see your trades. I
You guys
completely
are acting
understand
like
your privacy as
it's
well.
completely off the table. It's not off the table. I mean, think about it, guys. We started this 4 months ago.
Yeah.
You guys do understand that this is a complete change, right, of my whole schedule, right?
Yeah.
Having to be like going from not doing any of this, where even like doing these webinars, this is something that I wasn't doing, right?
Yeah.
This is something that's one extra thing. Okay,
Yeah.
being in the chat room every morning, right? Pre-market, that's one extra thing, right? Being able to answer all of the DMs that I get, that's one extra thing. Being able to upload the videos on TikTok or Instagram,
Hire
that's
someone, bro.
one other thing. You guys understand that, right? Like that's the
and
thing.
I
I'm not
appreciate
saying
it
like
too.
yeah, I'm not saying like it's off the table at all or anything like that. Yeah, in the future, yeah, maybe. But I'm just saying at this point, I just don't want to do it.
Well, so let's hop on Discord after this, like for like just 5 minutes. You down?
Who are you?
Oh, Raw Dog, yeah.
Yeah.
All right, bet.
And then also same thing, right? Going back to the option thing. Look how many options there are in 1 week's time frame. Look, you can choose hundreds of these contracts. That's why these contracts don't have crazy volume, simply. Right? Because you can choose so many different ones. And then because, it kind of separates a trader from because if it was stocks, it'd be actually not that hard, right? If I was just trading stocks, what it would be like is literally shorting Amazon at 31.90. All you guys can follow me. It wouldn't even affect the stock that much because there'd be 5, 6, 7, 8, 9, 10 million, right, shares of volume. Where with these option contracts, because we're going to be trading, right, it separates the swing traders, it separates the long-term traders, it separates the daily traders, and then it separates the price action traders also, right? Because weekly options, you can trade it for swing or you can trade it for the price action that is around. So let's say, we're around the 600 for Tesla. Which option contracts am I going to use, guys? Maybe the 600, 650s, right? One of them, right? For this week's contracts. So, it's like one of those things of, right? Like with the options, like it's very hard to, have people see everything.
Is that
but that's just
accurate?
Besides the
like
point.
if you pick up a 1 minute candle on that option that you have open, is that volume indicator, like it says 15 up there? Is that correct?
What?
Or is that pick
That's
one of
the
those
thing
candles?
though, right? Like being honest, I don't think that's correct, honestly. I think it's way more than that. A lot of selling and a lot of buying was done on that volume. I don't think it's 50, honestly. Let's see how much was on this one. I don't know how accurate Thinkorswim is with options, but there are a lot of volume that goes unnoticed. But see, this one had 563, so that seems pretty accurate right there. But some of these, right, where you don't get crazy ton, like 82 right there, that's a lot of volume for Amazon contracts. I'm not gonna lie. So this seems pretty accurate right now. But sometimes you get those volume that doesn't register for options, because at the end of the day, I don't have no clue how. Even though options been around for decades, like it's still something that's new, which is crazy.
You usually trade 85-ish, right? Maybe 100. But when you do those trades, do you see your volume pop up here, or?
Yeah, yeah.
And you see your 85 register in there, right?
Yeah.
Yeah, so maybe it is accurate.
But that's the thing though, right? Like you don't know if the option contracts from, like, let's say Interactive Brokers are going through the same thing or not. And you don't know if it's showing on my servers versus, I don't know, your servers. I don't know how accurate it is with the options. I know with shares, it's freaking pinpoint accurate. Any order that you put up, right, will go through. But then the same thing is, right, is shares.
Yeah.
One
question I had was
a lot of contracts that kind of go through the back and stuff like that, and a lot of stuff happens.
One quick question I had on we're looking at time frames, right? You were looking at the 1 minute, the 5 minute, and the 4 hour. Is there a reason why you prefer 4 hour versus, like, the longer time period over 5 minute would be 15 or 1 hour? Like those are the other two closer popular time periods. Why do you prefer the 4 hour versus like the 15-minute or the 1 hour?
I think the reason we use 4 hours is 4 hours is pretty close to the daily. I'd use the daily, but then of course with the daily we already get all of those plot lines that we draw in pre-market, right? So that's already done for. So technically there's no use of daily, right, for me. So instead of just using the daily, I just have the 4 hour on there just so that I can look at the 50 EMA, the 200 EMA, and then see how the stock reacts basically in there as well, and kind of see some of this lower time frame volume, right? Like seeing the resistance right there, right? It's something that I might not be able to see it on the daily. Why? Well, because look, it's in between one and the second day, right? It's in between basically after hours and then also right intraday volume. So this resistance I won't be able to see on the daily where I'm able to see it on the 4 hour. So yeah, I can see the same resistance on the 15-minute, but then it won't be as easily. I won't be able to just look at this quickly and just be like, draw a trend line right there. Where with the 15-minute, then I would have to look back 2 days worth of data. Do you understand what I'm saying? Kind of.
Oh, so the 4 hour has more compressed data, so you get to see a lot.
Yeah, to just glance at really quickly. Yeah.
Versus the 15 and the 1 hour. So and you don't use the 15 and the 1 hour.
Yeah.
Do you ever hop in there? Or you don't use them at all. You just watch the 4.
I'm sorry, dude. What was it? I was looking at the chat there for a second. I kind of blanked out. Go ahead.
Yeah, you don't look at the 15-minute and the 1 hour at all. You just focus on the 4.
I don't. Okay. I'd tell you if I do. I don't even glance at them. Mainly daily for levels, 5 minute for trading wise, 1 minute for entries. 4 hours just there. Honestly, it's just something that's extra. But that's literally how day trading wise it goes. But for long term, you want to kind of glance at the 4 hour a little bit, but mainly daily and weekly.
Yeah. So I think a good idea for the group would be when you're looking at 3 time frames, 1 minute, 5 minute, and 4 hour, what percentage of your attention is on each of the 3? So you're mainly looking at the 5 minute. Is that like 75%, 80% of the time you're looking at the 5 minute?
I would say about 60-70% of that. Yeah. 70%, and then maybe 10-20% for 1 minute, and then 10% for like 4 hour.
Yeah, that's good to know. Yeah.
I guess it depends on, if you're holding for 3-4 days, if you're doing swing trading, then you want to look at longer time frames. But if you're doing day trading, you wouldn't rely on a daily chart, right?
Yeah.
I think this is a great example for like the 4 hour for Amazon. I feel like Amazon is coming to inflection point in the next couple of days where it's going to go to the upside or the downside, right?
Right here.
Yeah, for the 4 hour. If you look from a macro scale, I feel like there's going to be a decision point for it to go.
Exactly. Once it gets below even like 35, 59, this is where, you can say maybe they can trap it all the way down to the 3100s, which they still can. But technically there is a lot of support right now, right? If we're able to bounce from here and are somehow able to kind of get above the 3150s, 3160s, right? Or even the 32 30s, right? We can see the 3300s just like we talked about, right? We've been talking about that $3,300 level, but we would need this Amazon to kind of bounce from here and then see, basically make a higher low and then pop up. But we'll see how that goes. I mean, the market seems pretty good. I mean, in the coming days where it's at all-time highs and it's continuing right now. So if the market helps, Amazon might be able to kind of get that pop.
Yeah, because I feel like there's going to be a Santa Claus rally soon, right?
Yeah. All right. Yeah. I mean, that's one of the big things, right? Like that's actually almost every year I've seen it, right? Dude, they were saying that, 2018, when the market crashed about 20% right before, right, the December rally, right? The Santa Claus rally that you're talking about that usually happens on Christmas, right? The week of Christmas or the week before of Christmas didn't happen yet. And they were saying that, okay, this time it's going to be bloodbath. And guess what, dude? They came in and they literally ran up the whole freaking, I think it was like, I don't even know, man. They actually ran up the whole thing. It was like a V-shaped reversal. starting from there. So watch out for that rally. Let's see if we get that rally. I mean, probably be a nice little long
Hey,
opportunity.
Manny. So, being new, I'm being on for a couple months and joining pre-market last month, but I'm curious, right? So we always have our, our Facebooks, our Amazons, our Teslas, our, BAs, whatever. I mean, like, how long do we ride those stocks? And man, I get it. You're probably going to shut this down soon because we're over an hour.
Yeah.
But I appreciate it. But I'm just saying, there's always those, like like on Thursday, Friday, it seemed like snow really blew up. And I get those options have big spreads between the bid and the ask, and they don't really reflect the kind of the price action as well with the stock. And so I'm just curious, how long do we like
until they become like let's say irrelevant?
Yeah, like how long have you been on Tesla? Like how long have you been on Facebook?
I've been on Tesla for about a year now since it started.
Okay.
Believe me, before that I wasn't trading Tesla too much. Was trading Netflix actually. But look, Netflix became irrelevant to me when it started doing low volume and it started doing this sideways action. And it showed me that it literally just wanted to be ugly. So if it wanted to be ugly, who am I to tell it to not be? Right? So Netflix being one of the favorite stocks that I used to trade, I stopped trading it. Why? Well, because look what it's doing right there. And look what it was doing earlier as well. It started.
Can you pull that over on the screen? Can you pull that over some?
Yeah. Let me make it bigger for you guys.
Yeah.
Because just to oh my God, dude, I'm just working with a little bit low of a space. There we go. Now I should be able to do it. There we go. Just to show you guys, look what Netflix started doing. When I was trading Netflix here, right back in the day, it was doing this. Right, nice little trending up. You would get these crazy candles, but then for some reason, right, Netflix started losing a little bit of a volume, and it just started going sideways. And that's when I stopped trading too much, right, of Netflix. It's just the behavior of a stock. It's like you'll see the change. Like once you trade these things every day, you'll see the change in the behavior of a stock. And just to show you an example, also. Look at these candles, man, on Netflix. Look, one candle, big as hell. The second one, big candle. And then you get these crazy wicks where it's like direction is really hard to see, right? But now, let me show you something like Roku. Look how much of a cleaner move you see on there, right? Yes, some days you'll get these crazy up and down and sideways. But mostly if you go back, you would get this crazy move to the downside and crazy move to the upside. So it really honestly, like you can get goat with even any type of stock. But honestly, what I look for is anything that has this clean type of action. I don't know why I typed that in the chat. I was trying to type Tesla here. Like I'm trying to look for these clean little movers, right? Anything that makes these clean type of moves down and up where, if a stock just keeps going sideways too much, then it kind of tells you, right? Like it's time to be, kind of stop trading it. And then also another thing I want to show you guys is, all right, give me 1 second there. Somebody's calling me, but look, this is where you can see, right? Look how the volume is. Can you guys hear me now, right?
Yeah, I can hear you. Yeah, man, you got hoes in different area codes, bro?
What?
No, I'm playing.
Oh my God, dude, it's my dad. That's he's out because he doesn't understand. I'm on a meeting right now. All right. But
you sure it's not the IRS?
Getting booty calls.
Bro, it's because it's my MacBook, right? Like, that's why it's connected to it. So it's going from there. But look, when a stock does something like this, right? After like 10, 11, 12, right? Don't trade it, honestly.
Gotcha. Thanks, man. That's awesome.
Anything with ugly volume like that. I mean, I'm not gonna lie, this was pretty clean of a move on Netflix. But look, you'll see these like little chopped right there. You see these like little holes. Amazon does that time to time. That's why I hate right, trading Amazon, and I have a love and hate relationship. As everybody knows, they have contracts, but look what it does, right? Sometimes you'll have these clean, right, like movers, and then sometimes you'll get these like little choppy, low volume days on Amazon. Just to show you an example, if I can pull up. And then that'll be the last thing we do, and then we'll kind of go on from there, guys.
Are you gonna be posting this on YouTube, bro?
Yeah.
For sure.
Just to show you guys, look, right? Look, how you gonna, you can't trade this, honestly. That's why I only trade Amazon in the first 30 minutes. There we go. The first 30 minutes. Why? Well, look how clean of a move you get. And then, of course, you get that nice volume. That's it. And then after that, usually, it dies down. That's why I don't trade after like 11 or so. But you'll know, man. I promise you, like I don't have to tell you to look at a certain stock or not look at a certain stock. You'll just know. Like if you like the stock and you're doing, how should I say, and you're trading it, you'll see when the patterns that you've been looking at on that stock don't really work out, and then you'll just kind of lose interest in that stock, and then you'll move on to the next big thing. Like when NVAX was around, we were trading NVAX, right? At the end of the day, we do look for momentum, right? Like let's say Nvidia has earnings, we're definitely going to trade Nvidia, right? But do I trade Nvidia every day? No. Why? Well, because it's just a stock that I don't resonate with. Some of you guys might, which will be the plus sign for you, because you're going to actually be able to judge that stock better than me. That's why, we're all human. We're all different, right? We all think differently. But
cool. Thanks, bro. I appreciate it, man.
Yeah.
Manny, just quick question. I've ever since I've been trading, it's basically on the stock up, but for some reason I can't get my hands around going down. Like I
had
can't.
that problem too in the beginning.
And I can't figure out how to get out of it. It's like I always feel like it's dropping, but it's gonna go up.
Do this. Trade it a couple of days like this. This is an inverse on Amazon. If you don't know what's going on right now, this is everything that Amazon would do, but it would do the opposite. So like you can't trade it like this on the active trader, won't show up, right? Because you can't really buy the inverse, right? But what you can do is you can have this chart open and short the stock when you see a long setup. And that'll kind of help you understand and get over the fear of you might have better trades to the upside. So you want to have both charts open. That's what I did to kind of get over it. I'm not going to lie. I had both charts open. I would have the inverse chart open and I would have the regular chart open. And honestly saying, going on demand as well, a little bit, not a bad idea, and kind of just practicing shorts, right? Again and again and again might help you get over that fear. Because that's literally what I did. I did this one thing.
Is it a dot that you put out or a tilde or?
What was that?
What did you put in front of the stock?
Negative sign.
Negative sign. Okay.
Yeah. But I promise, right? Like I think on demand will help you.
So one thing I recommend is if you're trying to get to know a stock, I would say every day, take a look at the chart, the 5 minute, 10 minute, 15, like whatever. And if you want, just paper trade that stock and then learn it. Take a month to learn that stock, know every movement. That's my recommendation if you're trying to get to know a stock.
And then if you want to be good at shorts, do the same exact thing. Just keep on going on demand and keep on taking short setups. That once those short setups start working out, watch, you're going to become short bias. And then you're going to be like, shit, now I need to learn to be long bias. And you do that a couple of times, you're just going to get comfortable with both. And then the same thing goes back to, right? Like it's all in our head. We need to just get into kind of being able to read charts. If you're able to read charts and you're able to understand that if the stock breaks this trend line, we're going to head to the next resistance, which would be the next whole number, something like 292, 291, then you already know what the stock's going to do. Then it doesn't matter if it's a long or if it's a short. And, once I got over that, that helped me big time with the options, because the options is the same thing. You would have to buy puts, not short the stock. Right. So it's just in the mindset, bro. You'll get over it. I promise. I had the same exact issue though. But we're gonna end it right there, guys. Anything else? Really quick before we leave.
Yeah, quick question. So I know you only trade with 85 contracts, but like, do you ever see yourself going over that number, or is that like a set number for
I
like
will. Yeah.
one time?
It's just you know what I mean? You can't just keep on going up and up and up. You know, you have to get, because right, like I went from 50 contracts to 85 contracts when these stocks split, right? So it was easier for me to move up from 50 contracts to 85 contracts, where now I just need to get into the confidence level of where I'm really good at trading 85 contracts, and I need to move up slowly to maybe 100 contracts, 200 contracts, right? Because like different type of trading. If you're trading 200 contracts, that's literally 100% extra volume that you're putting into an option, which, you know, same thing again, right? Going back to the liquidity issue with options, right? And then also being able to have that mindset of growing something 100%, you know, going from 100 shares to 200 shares, very crazy.
How would you deal with like you know how you said the liquidity issue? Would you just spread it out among different strike prices, or?
I think that's how it would go down, or just kind of maybe change up my strategy maybe a little bit, where it's not really just quick scalps, where it's more like being able to catch the bottoms and buy some of these really how should I say, out the money contracts, and just keep on buying the, you know, basically bid on that, right? And load it up with like 100, 200, 300 contracts, and then just riding it out for maybe 100% gain or something like that.
And would that be for swings, or would that be for like your
day trading? Day trading. But then of course, right, that with that you just need to clean up your, again, right? Like you have to become a little bit more sharp, a little bit more better. So, you know, everything doesn't happen overnight. So that's why we just keep on, you know, slowly going, right? Who knows? Maybe I'll be trading 500 contracts with the same strategy.
Are you opening a new fund or ETF?
No, man, I don't. Not right now.
It's easier, man. We don't have to even get onto this call. Just give you the money and you take it.
But then the same issue then it becomes, right? If I trade with all your guys' money, right, we're providing so much liquidity, then it wouldn't work.
Who do you think advises ARK ETF? It's Wall Street.
I don't know, bro. Am I? No, I'm joking. It's not me, guys. Not even close. But guys, all right, like I said, amazing talking to you guys. I would have to go now.
Just a quick humor, man. You know, I want to tell everybody that, you know, before I started 4 months ago, I was an option virgin, and now I can confidently say I'm a slut now.
Okay, brother, that works, man. It's gonna be a little bit harder to put that on YouTube, but it's all good. It's no problem.
Thank you, Manny. Have a good day.
Thank you, bro. Have a good day.
Guys.
Thank you.
Remember,
Guys,
less than 5 minutes of your time on Discord, all right?
Yeah, of course. All right, bro.
Peace. Bye-bye, guys.